Hey everybody, still here for the daily market pulse for Thursday, April 10th. So we saw stocks falling and aggressively at that. After two upside days in light volume, we had a very strong volume downside day today, wiping out the last 2 days' gains pretty much altogether and risking and threatening that another large flush may occur. Now, that is something that I would prefer seeing. I'd prefer to see a large capitulation panic sell that would signal a true bottom, and then we can get on with business on the long side. But they have liked to just kind of mess around with this thing for so long. But anyway, here we are, and let's take a look. So there's the Dow. There's the two-side upside days. There's the drop back to the 50. Now, still holding support, but this is threatening now to flush down into lower levels like 16,000, possibly even as low as 15.8, where the 200-day moving average is as well. If we look at the S&P, it aggressively dropped and already hitting and getting below the 50, but also below the recent lows from the other day on the bounce from Tuesday. Uh, Still kind of hanging on to support to some degree in the last pivot areas, but still below the 50 for the first time in a while. Let's see here. And then, of course, move room to 1800 and the lower part of the channel. You see the dashed blue line, so there's still room to that. And you never know, the 200-day moving average as well as the last pivot area that occurred back in the early parts of February as well. If we look at the Nasdaq, it's dropped back to the lower portion of the red channel, but also the blue channel, which is the bullish channel, and then of course the previous lows at 40.50 as well, with room to 4,000 and possibly a little bit lower, including the 200-day moving average at 39.50. So that's what I'm looking for in terms of a big rapid flush and potential reversal in that area. TSX hit the dark cloud cover high and reverse with a bearish engulfing below the 8, below just right at the 20 at this point, with room still to 14.2, and then the 50-day moving average as well. So as you can see, the TSX has for the most part been sideways since mid-February, almost the last portion of February. So it's been going on for a while. It's been going on for almost 8 straight weeks now. So looking for that 50 to get tested, and we'll see if they can drop back down to 14,000 or not, if that's their plan. US dollar, Canadian dollar. If you recall, yesterday we had a drop below 109 in the support area, the 50% retracement. Now it's bounced back with a bullish engulfing. So that might have been the test right there. That might have been enough to say, okay, go. So I'd say it has a shot to get back up over one. If it goes over 110, I'll be more bullish on this particular market. Otherwise, I'd be looking for more downside into maybe the 200 again at 107 to 106.50, possibly. Let's look at the Treasuries, because the Treasuries were strong, of course, relative to what happened in the U.S. indexes. So we said 134 would be the target. It hit 134 and just kept right on through and hit a new high, essentially at this point. Still room to the upside. Currently, I think after hours it was a little bit sideways only because of a little profit taking, but for the most part, this is a pretty good strong move and breakout. Looking for higher levels, so that means the markets are likely going lower. So looking for 135 and then 137 on the upside here on Treasuries. The yen did kind of the same thing. It went higher, of course we know that, and then paused yesterday, and then today zoomed higher once again. But still room to 99, and still looking for higher levels, 99 to 99, almost 99.50 for that matter. So there's still more upside, I believe, here on the yen as well. Gold, it went a little higher again, back into 1320. That was the target we had, where the 20-day moving average happened to coincide as well. Still looking for higher, like 1345 to 1350, and then ultimately 14 and 1420. It might pause here. The 20 is declining, the 50 is rising. It's stuck right in between those right now. It might be choppy in this area until it finally resolves. We could look at the financials. I've not looked at XLF in quite some time. It hit a wall, essentially at a ceiling at 2250 or 2260, pardon me, and then reversed lower into the 50, bounced slightly yesterday and the day before, and then really reversed, making a new low into 2150 or so. Room to 2140, then of course a lot of room to 2060 to 21 with the 200-day moving averages as well. So that's looking like a downside move there. I'm going to skip silver, go right to crude. So after two good strong days today, pretty quiet. Just a little hot on me, kind of almost doji-like formation, right? At just a 103.50 with room still to 104.50, and then of course 105, and then on the way up to 108, 110. So I'm still liking that on the upside with everything still rising and forming this nice kind of scoop formation here on oil. Let's take a look at the small caps, the risk on IWM equivalent of the Russell. There's the channel, just like we saw the Nasdaq earlier, the flush off of the 116 potential resistance and polarity, as well as the 50-day moving average. Make it a new low into 111, almost 112 there, and then room still to the 200, the lower channel, and 110 down below, possibly as low as 107, where the next pivot area is down here. Let me extend that line here so that everybody can see that one right there. Okay, so that's looking like lower as well on that. And then we look at the VIX. The VIX, of course, would have considered a bounce today on the market like this. The VIX had gone up a couple days, reversed back in, but held above 1350, and then reversed strongly, making a new high today relative to the last several weeks, almost a month now, in fact. Back into $16 and room to 17, 18, 19, and possibly 21. So we're looking for that capitulation move potentially here. Let's take a look at the put-call ratio. Okay, so the chart is split in three. The put-call ratio moving average is on the top side. You can see the green versus the red horizontal. When it gets into and above 1, which is the green line, that's usually when there's a bullish reversal on the markets. You see the SPY has been holding support here all the way across, going sideways. We're looking for a flush lower, and then the put-call ratio getting over 1, and we're looking for the VIX to get up and over through the upper Bollinger Band as well, like it did back in January where the reversal occurred. Now, this never got up to 1, of course, but we saw the reversal nonetheless. We're looking for something more reasonable and a more significant bullish reversal if that's possible. We haven't seen one truly in a while. We saw it on the weekly chart, but it didn't actually amount to much of anything on the daily chart. So I'd like to see one on the daily chart ideally. But nonetheless, that's where we're at, and let's keep an eye on these things as well.